Price still rejecting from 92K here, leaving the fourth wave on the table still. Let's dive in and talk about it. So last week we were watching for 92K to play as either support or resistance here, depending on how it reacted in this area. At the end of the week last week, we got a little breach up, and then we rejected from it over the weekend. We were watching for a short play here, which played out a little bit, but we'll dive deeper into that when we get down into the lower time frames. Again, this area is so important because we have a level here that played as support in the past. When it broke down, it played as resistance. When it broke back above, it played as support. And that's kind of price action I'm looking for here, is how are we reacting to this level? So far, we've only got a breach, and a breach is only when you punch a line and you don't hold above it. You just punch it and you dive back down below it. A break is more when you break above it, either far enough away that it doesn't become an issue anymore, or you break above it, consolidate above it, or find support on it, and then you get continuation. So this is a break, this is a breach right here and back here. Because we have just a breach here, this 92K is looking pretty good to hold at the moment. So this is the first level that the bulls have to break above, and either blast above it, break it, or we got to break above, come back to it, find some support on it. And if it did that, the bulls would have a little more momentum in their favor. The other thing on the chart here is this down trend line. Now, this was important just because we used an anchor off of here, and then after we broke above it, it played as resistance, and then it played as resistance again. So we are using this as correlation to add to our evidence that we're going to get a potential rejection here, possibly. Because of these attributes, we played it short, and I'll look at it again, how we looked at this when we dive deeper down. But right now, we have not broken above this level. We just have a breach, just sweep some of these levels before we had some move down. So the question is, now what are we looking for at this level here? Let's dive in a little bit deeper and take a look at it. Down here on the 8 hour, just want to go over a more naked chart and just look at where we are as far as the count goes. I think this is going to be my bullish count for now. If we end up breaking above some of these levels and breaking this pivot here at 98, from here, I think there's some things we have to consider. One being that this is the bottom, that the bottom's in and that we're heading back up. The other is that we're doing something a little bit bigger here. Like this could be another X wave, and I'll go over that a little bit. But I think if we start heading up, a nice swift move up, this would be my final count if we end up going up to all-time highs and breaking some of these pivots up here, like I said. Again, I'd have to do something like 1 2 1 2, and then we're blasting up if the bottom's in. So if you're bullish, this is a good area to consider taking an entry and then putting a stop down here potentially, depending on your strat. But this would be the most bullish kind of outcome I can see at this point. Price action in here, again, is questionable, I would say. So I'm a little more cautious on it, but if this does start ripping up, I think this would be my larger degree count here. I know this has been counted a couple different ways by myself, by other people. I think the biggest thing we have to consider is what these moves are here. Are these impulsive, or are these some kind of correction? Just looking at this from afar, I think this looks more like a zigzag to me, something like that. Fitting with Elliott Wave and everything, we're looking for the right look. These don't give off a super ideal pattern. Again, they fit some of the rules and the guidelines, but just looking at it, it's a little sus. When things are a little sus, I have to consider all my other options just to keep my capital safe. So again, I know some people are counting this 1, 2, 3, 4, and I have it as well, 5. So there is a possibility, but I think if we negate that this is a possible just ABC or double XY, something to that effect, a corrective move, I think we're not looking at the full picture here, or not considering the full depth of Elliott Wave, and especially the guideline of the right look. So this is just the backup. Again, I do have this as a potential 1, 2, 3, 4 as well. But I also think this looks more like a zigzag just because of this large correction here. And I do have some theories on that, and we're going to look at that right now. So this would be my alternative count here, is that we're in some kind of X wave, and then we're going to get some continuation down. My primary right now is still the impulsive move down. We're still hitting a lot of most likely targets for the wave 4. We have the 50 degree off of the 2 and the 3. We're hitting the outer parallel, which isn't the most typical parallel you want to hit when you're in a wave 3 per se. It can still act as resistance, but typically we want to see this outer parallel. If it's a nice strong move, we're looking for this parallel to play, or the median line to play as resistance. Coming in this far to this parallel, it's still an area to look for, definitely, but this is the deeper, less likely. Typically, we want to look for it to reject from these two areas here. We have a previous degree wave 4 here in this area that could play as resistance as well. So we're still hitting a lot of most likely targets, even though this is the deeper on many levels, the deeper target for a wave 4, it's still in the works right here, and we're getting a rejection from this area as well. So this would be my primary count here for the impulse move down. One other thing I want to take a look at here are all these circles and squares here. So if we are going to count this as some kind of 1, 2, 3, 4, 5, you can notice here that we have a smaller wave 2 and kind of a deeper retracement here in the wave 4, and it comes to the 50. Now it does that more than once here. We have a small degree wave 2 here, and we have a smaller degree wave 4 here that comes back to the 50, just like this one back here, before we reject, and we get an extended looking move here. Typically in a wave 5, we're looking for some most likely targets, which is the 1 to the 3 off the 4, and you get this target here between the 50 and 618. And that's what we're looking for up here. And these seem to have gone past it here. And I'll just put them on real quick. So if we start up here, okay, we move past or to the other extreme of the 618 here. For this one, we go a little bit further. And as you can see, we extend out a little bit. So that's what I'm going to be watching for here, because there seems to be some kind of pattern. If we are going to count these as impulses, we have smaller wave 2s and then deeper wave 4s, and then we get an extended move that moves to the extreme of a most likely target for a wave 5. So if we carry that logic on with us, again, if we think these are impulses down, this is also a pattern I'm keeping an eye on, because at these lesser degrees, the pattern seems to be working out pretty good. And then even at the next degree up, we have a wave 2 here at this degree. And then right now we've got a deep retracement for the wave 4 to the 50 percentile here. So because we have that pattern continuing at the moment, if this is the wave 4, I'm going to be looking for the wave 5 to be extended and move down to at least the extreme of the most likely target for a wave 5, which is the 0.618 here. And then after that completes, if we're still in some kind of impulsive move down, I think we still have to offset this move up here, this wave 2 that I have it as. So we'll have to look for a move that offsets this, which would be, again, we might have to consider it to be a deeper wave 4 coming in, just because of the pattern that has been apparent here, in my opinion. It's something that we should probably look forward if this thing completes as it looks right now. So that's something added on to the Elliott Wave. Again, our lesser degrees can move up to our larger degrees potentially. So that's what I'm watching here, to see if this is some kind of personality trait that Bitcoin is putting in on this move down. The other thing we have to consider here is that this is just some kind of larger ABC, and then we're just going to finish up here with a large zigzag. But that's still a possibility. Again, as I've said many times, if we have a completed impulse, that means the directional bias has changed. It doesn't mean that we're going to continue on further down. If this is a larger degree ABC, you can still get that change. We have this impulse down completed, so that would mean our directional bias could change. It doesn't necessarily mean, just based off of this in a bubble here, that this is going to keep carrying on lower and lower. Again, once we get that completed impulsive move, we have to consider a directional change. We'll look at that a little bit deeper when I dive into this box here and what happened after the weekend in this area. And then we'd have to go back and look at our context here to see if it's going to be either a larger wave 3, or if we go even further back, if it's going to be some kind of ABC. Now we do have a swift move down here. I'll have to measure this out real quick to see what we have as far as slope goes. So let's just say it dives down right away. We're at a kind of a slower slope as it is right now. Typically when we're looking for slope analysis, we're looking at the primary actionary wave to be steeper, and then we're looking for the secondary actionary wave to be less steep than the primary. So this is fitting a zigzag at the moment. I think a lot of hesitation comes because this is so deep. We're not hitting the most likely targets that are typical for a zigzag, which is typically a 1-to-1 here for the fibs, and then we're looking for the base channel to play. And as you can see, we broke down. Now, a lot of people think it's less likely that because we went so deep, the zigzag is completely off the table, and that's fine. It's not super typical, but it is a most likely target. All that is to say that just because this completes as a impulsive move down doesn't mean that we're going to keep going 4 or 5. This could be the entire move that we're looking for. If we end up going like that, again, I'd be looking for this to be a zigzag. Now, this is going to tie in pretty good to what we're going to talk about at the lower degree. Just because you think we're in an impulse doesn't mean we're going to be in an impulse. We have to play what the price action gives us. And if the price action only gives us a three-wave move down, no matter how low it goes, we have to consider that was the end of a correction. We're not going to know for sure until we come up and kill some of these pivots to verify that the correction has completed and that we're not going to complete an impulsive move down. But there's always a chance if you have the three-wave move that's printed, that's all you have that's printed. Everything else from there is speculation and conjecture. And you have to consider that it's a possibility that it was just an ABC or a zigzag and it's coming back up on you. That's why a lot of Elliottians, especially ones that look to play season threes like we do, we're looking for the primary meat of the move, which is the end of the wave 3. But anyway, to close this out right now, the main pivots that we're watching here is 95 area. This pivot can hold and we end up moving down. I think the wave 4 is still in effect. Anything that we break above this level, I think it looks a little bit more sus that we're still in the wave 4 because we're getting closer and closer to this pivot here. And in wave 3s, we really want to see a nice far separation to build confidence in where we are in the count. And having it even this close is a little bit suspicious. So holding this level is what the bears want to see, and breaking this level to confirm that this was a corrective move up here is what would add to the steam that we're going to move further down into a most likely target for a wave 5, which is down in the 75K area. And then when we start moving away here, when we get a little bit more clues that were completed here, and this was the top of this smaller degree move, we can be a little bit more confident that we're going to get the follow through down to the most likely target for a wave 5. All right, so that's what I'm looking for at this degree. Let's go ahead and dive in a little bit deeper now. All right, my last video, if you stayed till the end, I appreciate it. And I also left these two charts on the screen while I was talking about certain things. So just want to go over what these were. Again, this is what I was looking for on the bullish side and the bearish side. I'm really looking for the price action to print ideally for me. Last week, I was looking for a corrective move back to this level, and then I would consider taking a long here and then looking for a secondary entry here after we break this level. Or if we got a break up above, again, a break, not a breach above 92 or 93K here, that we would look for support, and then that's where an entry for me would be. On the bear side, this is the side that played out beautifully. We were looking for a move internal to this impulsive range level as confluence here to look for an entry short, and I ended up taking that short there and looking for a swift move down. Now at this point, we only have an ABC down, in my opinion, at the moment. In real time in the Discord on Sunday night, I told everyone I was going to take profit here just because I was anticipating a bounce of some kind. Now, it did end up going over. I didn't get it to the tick. That doesn't happen all the time, getting the tick, as much as Crypto X would like to say they do. I ended up taking profit here. I feel like I got the meat of the move. It was a most likely target for a wave C and a wave 3. I'll just put this on here real quick. All right, we ended up breaking the 618, so that's why I ended up taking some profit off here. And because we're coming close to our other level of interest further down here. So I ended up taking profit nice and early there and getting a little chunk. I was anticipating or hoping for a wave 4 to come out here and then a wave 5. That did not play out, obviously. We got to smash up. So this is one way we can look at things. Like I was expecting an impulse to move down. I was wrong on the impulse, but I was right on the trade because I ended up taking a nice entry out of an area of interest and taking profit where I thought the most likely target was for this degree or this trade setup consideration. So that's what they mean when they say you can be wrong and still be profitable. It all depends on how you take profit. So even though I was hoping for an impulsive move down, we ended up getting a 3-wave move down, still profiting off this trade, not as much as we'd like, obviously. I did get stopped out when we came back above here, but we ended up getting a little bit of profit within this whole area as we have throughout this whole move up and down. We ended up catching a little bit at the bottom here, and we ended up catching the top up here. So now we got to figure out where we are in this next card. So I'm going to blow this up a little bit more here. Okay, just looking at the short-term bullish here. Again, I've seen a lot of Elliotticians and myself avoiding this whole area here. It's not ideal. It's questionable. It could go many different ways. I think we do have some nice contacts on the left here and on the right as well that we can look at to consider what this really is. I don't have a definitive answer. Spoiler alert, I don't know what the hell this is. This could be several different things. It's all going to depend on these two pivots here between 83.8 and 94 area. So if these pivot breaks here will potentially bring some clarity to this count. If you think this is motive, it doesn't really look too motive here, but it would complete a nice zigzag up here. And that's what I'm going off. We have a nice smooth looking impulsive move up here after a three-wave move down. So again, when we're looking for impulses, they complete or they begin things. So depending on if you're bullish or bearish, you can use that as your bias. If you're bullish, this is a prime area to look for a long entry here. We're right within the TDU AOI, which is between the 50 and the 618. All right, and we bounced off, and we had this level as confluence here as well in many of my last updates. And we've gotten a bounce already. Now, this reaction here isn't the most bullish looking thing at the moment. It does look corrective. So if we end up rejecting off of this level here at 90, which I think could play as resistance here and support if we break above or below it. But I'm watching to see if we break above this. Ideally, we just roll over here so we have a nice cleaner looking impulsive move down with nice separation between this correction and this correction. So we'll have to wait and see how this rolls over the weekend. Again, when we hit Sunday night and Monday morning, a lot of things can change. But ideally, I think for clarity purposes here, the 90.5K level is going to be the key. This could be a lot of things overall in the overall count here. Again, if this is motive, we could be done with this move here. If this is corrective, we still have to consider an offset to this portion here. So again, we're always looking for continuity in the market. So as you can see, we still have some time in this section here to offset this section here. So if we think this is some kind of motive wave up here, again, we could be doing the Super Bowl version would be an impulsive or motive move up, correction, impulse, and then we're going to just keep going up for a 1-2, 1-2 and head up to the clouds. Again, it all depends how this finishes in here, but that would be the most bullish outcome. Motive wave, correction, motive, correction, and then we're going to blast off from here. If we think this is corrective, we still have some counts that are pointing to the upside. So if this is corrective, let's say this is some kind of zigzag up. Again, we're looking for simple corrective types in the primary actionary wave of a complex correction. We're not looking for WXY in here. We're looking for an ABC in here somehow. That's the only thing that's allowed in complex correction is a simple correction within the primary actionary wave. So if this is some kind of simple correction, we're looking for the offset over on this side, which would send us up in the Y in the form of ABC, so AC. Again, it's all on this level. If this level breaks, again, it's played as resistance in the past and we haven't broke above it. So if we end up coming back above it, I'm going to be watching for a correction to look for a potential continuation, and then I can look to change this Y. Right now, this is one of the options. The other options include a diagonal, and the diagonal would work for both situations where if you thought this was a simple correction, if you thought this was a complex correction, either would work for a diagonal in this portion. One wave in the diagonal, wave 2, and then we could still be putting in the wave 3, 4, 5, something to that effect. There are a lot of options. Most of them point up at the moment, depending, again, on what you think this is. The only one that really pushes us down at this point is that this hole right here was some kind of motive wave. Now, again, when it comes to slope analysis, the secondary actionary wave is typically the more lazy of the two. So this doesn't quite look complete yet, and it doesn't quite fit the guidelines. Of course, when we're dealing with Elliott Wave and we're dealing with these complex markets, other things are at play here. This was all put in over the weekend, and then on Monday or Tuesday, we ended up blasting out and taking out the price action that was put in over the weekend. So there are different contributing factors besides just the Elliott Wave in this asset, Bitcoin, and in other assets, especially ES. So if we're just going to look at the basic Elliott Wave, there are some counts right now that still point up, and I think this is an ideal area to look for that, with most of them being killed here at 83.8K. So again, this is still kind of sus in here because it looks corrective. We are bouncing off of the level of interest, But I think that would be the more bullish alternative here is if we can hold this level or hold this area and head up and break this level at 95K approximately. But if we do end up rolling over and coming down and breaking this level, I think some of the more bullish takes are off the table because this is an impulsive move up. Breaking down below this would force us to consider that this was some kind of corrective move up here and that we're going to roll over and head lower. My first clue is going to be a break of this level here. We end up breaking down beneath it and correcting to it. That's going to be what I'm watching for as far as playing a short. Again, it looks like we're completing an impulsive move down here. So if we just do a little spike, that would complete an impulsive move down. And then again, we're looking for the C3 setup, which I think 90K or 90.5K would come into effect then, play as potential resistance for a continuation down. Speaking about contributing factors, I just want to take a look at ES and the DXY here, see what they're doing. Right now, you can see up here, this is looking a bit toppy. Nothing's going to stop this from blasting up. But for right now, if we're looking at this from the Elliott Wave perspective, we're getting higher highs and it looks like a diagonal is coming in up here. So there's a potential we could have an impulsive move completing here after this potential flat. And then we have a diagonal coming in to complete this move up from down here where we bounced at 65 and what ended up helping out Bitcoin and where we bounced over here as well. So if this bounce is coming to an end, I have a feeling like we saw on Sunday, we got that move down and Bitcoin ended up dumping more percentile than ES here, but we did end up sharing in a correlated move on Sunday evening based off of ES dumping here in this section. The other thing I want to look at here is DXY. This also looks like a potential for a completed zigzag or completing zigzag. We ended up sweeping this level here and what looks like an impulsive move down. So if this is ready to retrace internally to grab some more liquidity or move up in any kind of fashion, again, I think that's another contributing factor that Bitcoin is going to possibly correct and head lower. These are things I'm considering. Again, it's a correlated asset. The correlation comes and it goes. But if ES is happy, then I think Bitcoin and crypto is going to be happy. And if it ends up rolling over here and correcting and breaking out of this upward channel, I think that's going to cause Bitcoin to roll over and potentially give us that way at 5 again. Now, that's the same thing I said last weekend, where I thought if this was the end of the impulsive move up here, that we're going to end up coming down and correcting internally, that Bitcoin was going to move down for the way of 5. So that's what I'm seeing. If Santa's going to be nice, we're going to just keep going up to the stars. But if Santa's going to put shit in our stockings, I think we're going to end up rolling down here for the way of 5. DXY is going to pop. ES is going to correct. And crypto and Bitcoin is going to roll over to complete a potential impulsive move down. All right, that's going to be it for this video. Thanks for watching. If you want to learn more, come check out the website and sign up for the belt system here. If you want to check it out, there is a free option. You can see if you like what the course has to offer and the delivery, and then you can go on and carry on to the next belts, which all build off of each other. Right now, we have a 50% off Cyber Monday sale still going. So you might want to take advantage of this. I would definitely recommend this course as this is how I primarily learned my technical analysis. So come check it out. But that's just what I'm seeing in the charts for today. As always, I'm just rolling with the waves as the PA Prince. If you have any questions, thoughts, or a different perspective, drop a comment down below. I read them all. If you enjoyed this kind of Elliott Wave breakdown or picked up something new, give a like and subscribe. It really helps me out. And have a good one. Trade safe, trade clarity. Take it easy. Later.